All right, taking a look at the clock, we're about an hour away from the release of the latest inflation numbers. Economists predict the Consumer Price Index, CPI, report will show inflation may have slightly moderated last month, but they expect President Trump's new tariffs to push prices higher, especially for goods like cars and electronics. Our Nancy Cordes talked to Commerce Secretary Howard Lutnick about President Trump's policies and fears of a recession.
Will these policies be worth it if they lead to a recession, even a short-term recession?
These policies are the most important thing America has ever had.
So it is worth it.
It is worth it. I don't think the only reason there could possibly be a recession is because of the Biden nonsense that we had to live with. These policies produce revenues.
All right, Kristin Myers is here with me now in Studio 57. She is the editor-in-chief for ETF.com. That's a company that helps investors and advisors. Good morning to you. Thanks for coming in.
Of course.
Haven't seen you in a while. How concerned should people be about this potential recession that we're all talking about now?
Yeah, I know that right now, if you were looking at your investment portfolio or you're looking at your retirement account, you're probably freaking out, and markets have been freaking out. I will say, however, that economists right now are not anticipating a recession as the base case. So they're not presuming that we're definitely going into a recession. But what I can say is that the odds of a recession are ticking upward. I mean, depending on which bank you're talking to, which economist you're talking to, that percentage chance or risk, you can call it, of a recession ranges anywhere from about 20%. Larry Summers, that's the former Treasury Secretary, said just yesterday that it was as high as 50%. So these are not great odds. 50% chance is not great. The odds are increasing, but it's definitely not a certainty that we're going to tip into a recession.
So then what should people at home do with that information? Because all we keep reporting on is these tariffs, the threats, the ongoing conflict, and now the possibility of a recession coming. So what should people be doing with their money? Maybe they should be doing nothing. I don't know. You tell me.
There are things that you can do, at least when it comes to dealing with an economic downturn, dealing with a recession. On a personal finance level, there's a few things that you can do. One, start to save a little bit more cash. If you lose your job, you're going to want to have some pretty robust savings to really help you pay your bills. Two, you really want to make sure if you have any debt, start to pay that down, because you don't want to have to try to pay debt, figure out how to pay bills if you are losing your job, for example. Now, when it comes to your investment portfolio, this is where you really might want to get a little bit more defensive. If you're heavy in on tech, you might want to consider looking at things like consumer staples, utilities. These aren't the sexy, high-growth sectors, but they are more defensive positions. But other than that, I guess the really big thing when it comes to your investments is do not try to invest around these tariffs. Do not try to invest around Trump policies, because quite frankly, just this week alone, and we're only on Wednesday, I mean, we've already had back and forth on tariffs. Exactly. We were raising them to 50%. Then we weren't. We were only going to keep it at 25. It's going to take place today. Tomorrow, maybe it won't. You can't really invest and come up with an investment strategy around that.
Yeah, be long-term and boring is what I hear a lot of financial advisors say, not emotional. What are you looking for then out of this CPI report, looking at February's numbers? What's important there?
Yeah, so I mean, we still have seen kind of some stickiness and persistence inside of the inflation report. I'm going to want to start to see some of that go away. But I think, again, really, it's not so much this inflation report, but really the inflation reports that we start seeing going forward in the next 2-3+ months, that we're really going to start to see, if tariffs do go into effect, start to see those numbers really start to be really reflected in that CPI report. These are February's numbers, right? It's just now hitting around mid-March. These tariffs didn't even go into force until the beginning of February. So we're not yet going to see them. So I do still expect that inflation to tick downward. And that is what the Fed is going to definitely be looking for, at least when it comes to that FOMC meeting they're going to have next week.
Okay, Kristin, thanks for coming in. And you heard it from Kristin and from me. Be boring. Don't be emotional.
Be boring. Don't be emotional. Don't freak out. Don't panic too much. We're not there yet.
That's the news we can use. Kristin, thanks for coming in. Great to see you.